Now, the last one of the important section is on panel discussion on budget 2023, which we are going to discuss on economy, industry, infrastructure, agriculture, and healthcare sectors. For this, from industry, three speakers have come. I welcome each and every one of them. The first one is Mr. Dr. P.A. Padmanabhan, President, Finance and Group CFO, Rane Group. Welcome, Mr. Padmanabhan, sir. He is the President, Finance and Group CFO of Rane Group, leading auto component manufacturer based out of Chennai. He is responsible for formulation of policies and driving synergies across multiple businesses within the group, supporting strategic initiatives of the groups and leading M&A. He is a triplet and also a commerce graduate from Vivekananda College. He did PhD in management from Institute of Management, Nirma University. He started his career with Thermex Limited, then worked on Wintech and Zydus Group before joining Rane Group in 2018. He has been recognized by Committee for Members in Industry of ICAI in 2015. He has been awarded CFO 100 Roll of Honor for 2017 and 18 in the category of M&A. Hearty congratulations, sir. He also attended Executive Development Program at IIA Madras and Program for Senior Management at ISB Hyderabad. He is also a member of CFO Board, a body of senior finance professionals from across the country. He is a panel speaker in panel discussion in forums on key development in industry and finance profession. And he also made various guest lecturer at MBA Institute. Once again, welcome Dr. Padmanabhan, sir. Now I invite Mr. Kumar, Senior Vice President, Head, Internal Audit and Risk Management from Ashok Leyland Limited. Welcome, sir. Mr. Kumar is a postgraduate in Commerce and qualified lawyer with fellow membership from Cost Accountants of India and Institute of Company Secretaries of India. He also attended Advanced Management Program from Senior Management with IIA Madras. With more than 3.5 decades experience, his expertise includes various finance, accounting, capital market, audit and risk management. He also worked as a director in several group companies and has been the chairman of audit committee of these companies. He has also been various committees of CIA, Regional Committee of Central Excise Department, and also served as a chairman of Siam Finance, Leasing and Insurance Group. He also contributed to several articles in leading newspapers on subjects relating to economics, finance, economic laws, and also been a speaker in several domestic and international seminars organized by professional institute and industry bodies. With a deep interest in Carnatic music, Mr. Kumar has also penned more than 300 songs in Tamil language on various temples and released 12 albums so far. His songs can be heard in his personal YouTube channel, TKR Music India. So whenever we are having a free time, we can watch this channel. He is currently holding the position of Senior Vice President and Head of Internal Audit and Audit Risk Management in Ashok Leyland Limited. Welcome once again, sir. Now I invite Mr. S K Rangaswamy. S K Rangaswamy is a commerce graduate and also a chartered accountant and a cost accountant. He holds a diploma in risk management and diploma in systems audit. He completed his articles with Brahmaya and Company, and he also holds a post-qualification experience close to 3 decades, which range from stock market operation to project finance to general insurance. He joined general insurance industry in the year 2001 and is working currently in Cholamandalam MS General Insurance Company Limited. He is a Chief Risk Officer and a Head Operation CRM and Administration of Cholamandalam MS General Insurance Company Limited, which is part of $5 billion Murugappa Group. He also an active cricket player, a long distance runner, having participated in over 10 half marathons across various cities, and his hobbies include reading and listening to old Hindi songs. Welcome, Mr. once again to S K Rangaswamy. I welcome Mr. Rajesh sir to be a moderator for the panel discussion.
So I'll have the panel speakers, sorry for the delay panel speakers, there's some, but that's part of the game. So I'll have some time from each of the panels because they have view from industry, they come from various industries, manufacturing, auto and insurance. So it's a good combination. Maybe your views on the budget, 5 minutes If you still have, you're not very hungry, there'll be lunch served on the top floor. 1:30 there might be Delhi. Thanks once again.
While there were more expectations in terms of amendments in the current budget, there were much lesser than what one would have expected. But directionally, it's I would say a growth-oriented budget, a budget which is very relevant and required at this point in time. The important aspects I would say is that the focus on investment, which is coming out very categorically here. The increased allocation for investment is a very good move, and given the current situation, if you want a growth in GDP, the increased thrust on government investment is very important. So that is something which we have seen in this budget in terms of a higher budget allocation. The second thing is that the changes in the personal taxation is likely to bring in more money in the hands of the people, and that is likely to increase the private consumption, which is again a positive move towards increasing the GDP. That Saptarishi concept of having multiple areas, multiple parameters for investment is also a good one, where it is focusing on various aspects which include inclusive growth and developing potential, and then green mobility, and there are multiple aspects there. So overall, I would say it's a good budget, although one would have expected more given that it's a full year budget this time. But still, I would say it's a growth-oriented budget focusing on investment, infrastructure, and I would say it's a very balanced as well as a growth-oriented budget. There are a few, from our automotive industry point of view, there are a few changes which I would say are welcome changes. One is exemption from basic customs duty for any capital items, specified capital equipment, plant and machinery procured for the purpose of manufacturing lithium-ion cells for batteries for electric vehicles. So that is one good step towards promoting domestic manufacture of batteries for electric vehicles. That is a welcome move. They've also continued the concessional duty for import of lithium-ion cells as well as parts for batteries for electric vehicles. So that is also continued for one more year. So that way, this is a good move in the budget to promote electric vehicles. That is another good move. And MSME related certain amendments, which is bringing that into 43B, that is another welcome move, because auto industry depends heavily on the MSME sector. So bringing that under the 43B section will be another positive move in terms of boosting the revenues of MSME. Currently, the payments, not everyone makes a payment in time, and there are delayed payments as well as denied payments. So that way, it's a positive move which will not only improve the auto sector, but across the board, the MSMEs will get benefited out of that. So from an auto sector perspective also, we are reasonably happy on what has been proposed. You might be aware that the auto sector contributes to 49% of the manufacturing GDP and 7.1% of the overall GDP. So any investment and any boost to the auto sector directly develops employment. So that is another very good aspect. So I would say I'm reasonably happy with the budget proposals for the current year.
Good afternoon. This budget is the first budget, as she said, in the Amrit Kaal. This is a budget, in fact, people who have been tracking these budgets, union budgets for the last several decades, will find that this is one of the budget which is future oriented, which is really setting the agenda for next decade. If you really see the specific proposals which are contained in the budget, it sets the agenda for all sections of the society. From industry point of view, we may seek concessions, this, that and all. It's very difficult to satisfy. But at the same time, if you really see the objective and the role of the government is to set the agenda. They are very clear in this time. Promoting the green environment, providing you a stable tax regime, focusing on investments in sectors which will give you growth. For example, in the last 2 decades, the highest level of allocation to CapEx has been done during this budget. So instead of focusing on revenue expenditure, the focus has been more on the revenue capital expenditure. If you take automobile industry, any investment in CapEx will have a multiplier effect. Multiplier effect in terms of increasing the capacity utilization and growth, basically contributing the demand drivers. Here, there are a couple of things which will have a direct positive impact for the automobile industry. One is promotion of electrical vehicle, which India as a country has committed to the world, and we are ahead of its targets. And we will continue. As a country, we are very clear, government is clear, and we will proceed with that. And all OEMs are gearing themselves up for that. This reduction in customs duty for lithium battery and all will definitely help. And obviously, all of us have to work for reducing the cost of all these vehicles. To that extent, it will be good. Second is the continued thrust for investments in road sector. Road sector is a very big, automobile industry is one of the major beneficiaries of any investment in road. What US did in early 80s and then subsequently 70s and subsequently in 80s by China, and we are doing it now. So it will have a lasting impact and propel India into a major growth phase in the coming decades. Third is, if you see at the world scene, the problems in Europe and partly in US also can be traced to a lesser priority being given to manufacturing as a sector. In Europe, manufacturing is dead and gone. India also went that way in the last 1 decade. China used that as a big opportunity. And I think we are trying to reprioritize and starting to give focus for manufacturing as a thrust area. The continuation and a bigger PLI scheme is a policy in that direction. Definitely that will make large players to start investing more. There is a need to not only promote government investments in CapEx, government is definitely creating a lot of assets. At the same time, there is a compelling need to create right kind of climate for private enterprises to start investing in CapEx. Today we are not yet ready. We are thinking several times before committing ourselves. So that way, this is a good budget in that direction. And last, this thing is the clear focus on compliance. Whether it is industry or government, everywhere, all the sectors, we need to be clear that we need to comply. The minute all of us comply, the time and resources that we spend on dealing with the non-compliance related issues will go away. Okay, so it can be channelized to more productive things. So that way, I think from automobile industry, we cannot expect anything more. They have done their duty, and it is for the industry to catch up and do something which is really good. And I think we are in a very good phase, very growth-oriented phase, and I am sure India will gain out of that. Thank you.
Good afternoon. As everybody is aware, this is predominantly growth-oriented budget, and much to the surprise of the majority of the population, some minority population thought that 2024 being an election year, a lot of freebies would be pushed to this budget. But again, there were even newspaper articles that Modi as a prime minister is very much against giving freebies, and they very cleverly avoided that. And one more reason attributed to that was election being 1 year down the line. Any freebies in this year might not give them the desired results next year, but ultimately we have got what we wanted. It's a growth budget. And the focus has been on 7 pillars of growth, so aptly called Saptarishi, of which infrastructure development, green power, youth empowerment, so on and so forth has been focused upon. And to me personally, I don't think any industry, be it in the manufacturing or service sector, should feel aggrieved at not being addressed to. It covers, as Mr. Ramkumar rightly said, every proposal has got a multiplier effect. Say, for example, take automobile. We as an insurance sector are, as an industry, we are dependent on 40% of our premium coming through automobile sales. And as a company, individual company, it is closer to 70%. So any investment in the automobile industry has got an indirect effect on the insurance premium growth. That's one thing. And coming to specifics of my industry, there were a couple of expectations, especially on the health premium, like increase in the limit for medical health premium paid under ATD, and also the reduction of GST on health premium paid. But obviously, they could not be accommodated. That's my learning. And another thing was, we are also expecting the scrapping policy to be extended across the country, but now they are restricted to the government vehicles anyway, which are not insured. So probably this is the first small step towards that, and hopefully in the next couple of years we'll have an auto scrapping policy extended to all vehicles. Overall, it is an excellent budget. And also one more important point to be noted is, I think we are on the right direction to achieve the fiscal deficit of 4.5%. And that's all from my end.
The expected growth rate, right? We are at almost 7% this year, expected to do between 6 to 6.8. With the pressure across the world, right? With the recessionary trend and the war, all of it, do you think we are very optimistic in achieving, or the budget really provides support to achieving that 6 to 6.8% of growth?
I don't think so. I don't think so. Because there is a lot of catching up that we can do as a country in many sectors. In fact, if you see the real investments that have been taking place in the private sector, which actually is a growth driver for us, there have been hesitations in investing.
Right.
And largely, let us not forget that we are a sentiment-driven economy. Okay? So if the sentiments are good, people do invest. Do invest. And second thing is the conduciveness of the environment. And India is one of those countries in the world which have tackled this pandemic remarkably well. Remarkably well. And you can call them oases, whatever it is. You know, we have done well. And luckily, the uncertainties which other countries are facing, we are not facing. And one more thing which we should not forget is that very clever moves by our government. Keep the political things apart. Two things. One is, they have ensured that inflation is still under control.
Right.
Inflation is still under control through clever moves of buying crude at a lower price from Russia. So that's one. Second, that because of that, otherwise the interest rates would have gone up.
Correct.
So that they have been able to manage. Second is proactive measures to de-dollarize the economy in many transactions. For example, whatever efforts that they are taking, just if you assume that it succeeds, let us say, for example, Saudi Arabia and some of these countries, it will automatically reduce the pressure on the country to protect its forex reserves.
Right.
It will be a very big cushion, very big cushion. I think it is a combination of factors. In these situations, most important thing that you should do is, first you should not make mistakes, number one. Number two is make right moves. Okay, I think this government is doing both.
Correct.
And there is no splurge, And where it is needed, they are doing. For example, taking care of poor during the pandemic, which they are continuing to do, and at the same time prevent leakages. So they are able to make a balance between maintaining a fiscal deficit, this thing, as well as the funding the growth.
Right.
And channelizing the private sector funds towards growth. I think that's a good move.
Yes. I think they've been doing it in a very strategic way. I think they should continue to do it. That's going to be critical for them. So next one is to Paddu. Paddu, now BOE, Bank of England, has raised the interest rate similar to the Fed one. What would be the impact of this on India?
Okay. So Bank of England has increased the rate to 4%, and US Fed has increased it now is at 4.5 to 4.75. To some extent, RBI will be guided by what's happening outside. We have also been consistently increasing the repo rate from around 4%, we have gone up to 6.25. But we have sort of reached near the peak. So while we might still see some more movement upwards in Bank of England and the US Fed increasing the further rates, I personally feel we may not go beyond 6.5 because currently the economy is looking up, manufacturing is looking up. This year overall we have sort of performed exceedingly well. We have bounced back from the COVID days, and then in fact we are even better off than the pre-COVID situation. So in this kind of an environment, it is important for the government and RBI to support the industry, and if it goes beyond 6.5, then the interest cost for the industry will substantially increase and make it not viable for the industry. It might be counterproductive. So while they will carefully evaluate an increase going forward, because the inflation also has to be kept under check. I personally feel maybe 6.5 and at best 6.75. Beyond that, maybe they may not increase. So it will maybe peak at that level.
Okay.
So that's what I expect. Because this year, as anticipated, the interest rates have already gone up, and the industry has sort of adjusted to the increased interest rates. The second half of this year, while the first half we saw lower interest rates, second half already the companies were prepared for a higher interest rate, and now they have sort of adjusted to that. So a couple of more increases at best might be there, but not beyond that is what my expectation is.
Sure. Thanks. So Ranga, there's a lot of talk about building center of excellence like corporates, right? Government is also talking about building center of excellence for artificial intelligence. I think even in relation to developing skills for teachers, others. So what's your take on this center of excellence?
Center of excellence. See, Center of Excellence obviously is a very good initiative by the government, and results are there to be seen. For example, even in our own IIA, where we are tied up with the government of Tamil Nadu to develop skills, especially reaching out to the tier 2 and tier 3 or down south. So definitely it is an excellent initiative, and as my co-panelist Mr. Ramkumar was telling, we should get it right. See, the demography of India right now is around 70% of the population is aged in the age band of 28 to 35. So that's where the potential lies for us to fully harness and then take our country to higher growths. And if you see, there are again green shoots being visible. Take insurance industry per se. There are a lot of fintech companies which are come. Say, for example, when you purchase a travel insurance, there is a reason like if the flight is delayed, you get paid some amount. It is linked to such a manner that you don't have to make a claim at all. The moment it is linked to your airline itinerary and there is a flight delay, your account is automatically created. So that's the level of automation which is being developed, and it's unimaginable what tomorrow for all practical you and me might be jobless. of course, that's an extreme step. Again, we as a company, we have been investing in technology, of which when Deloitte has been a partner. And we have invested a lot of RPAs, which again is emanating from the so-called Center of Excellences. And the one assurance which we are given to all our employees is not to replace their jobs. It's only to take care of our future requirements. See, that's the first message we are giving to the employees. Please don't worry about your job. In case there is an additional, obviously our business is growing. We are growing at 30% per annum. These RPA initiatives are only to take care of our future requirements and not to let go the existing employees. So the centers of excellence are producing results in all the sectors.
There will be some private-public partnership as well. So there was not any mention of PLI scheme in the budget, but there has been a huge allocation to PLI. Some sectors were expecting to be included but not mentioned in the budget. So, so do you really think the PLI scheme is achieving its objective, and government should be expected to spend more in the coming years, cover multiple sectors?
I think so, because definitely in many industries, particularly industries which are critical to India's future growth, are being addressed through that. And for example, we take semiconductor industry. Okay, for example, it has got its own impact even in automobile industry.
Right.
Till few months back, we were
It's all
talking
connected
about non-availability of sensors.
Yes.
We never thought that will be a problem.
Yes.
Okay. So that way, I think they are making the right move in terms of targeting those sectors which are going to be critical. Another example I can give you is, there are a lot of talk about digital economy. Okay, data, how to convert data into an asset, national asset, even in terms of personal data. Okay, the kind of it is very rare to see governments focusing on such matters. I think right kind of a thrust is being given, and a new direction is being given to the industry.
Right.
And it will create a huge opportunity for software companies, and the kind of data that will get aggregated will help industry to analyze, take advantage of, and convert them into products. Which will be very, very extremely useful for the nation as a whole.
Sure.
Recording in progress.
Right. Thanks. Padul, over to you. If you look at after COVID, right, the demand for automobile has substantially gone up, right? It's a pent-up demand or whatever it is, it has substantially gone up. Any vehicle, any type of vehicle. Today, electric vehicles also, I think whatever people were expecting to happen after a couple of years has already happened, I guess. So, but if you see, there is a long waiting period for any vehicle delivery. Has there been any change in the industry with the way they have been looking at the orders that are being there? Whether the production happens, is there a time lag? Because are they looking for secured orders before really going through the production? Because the waiting time has substantially gone up now.
The demand was sort of impacted during the COVID time, understandably. So the entire industry was going through a tough time during that couple of years. And once we were out of COVID, understandably, due to the pent-up demand, the demand suddenly surged. And since there was already enough capacity available, it was easy for the industry to immediately start manufacturing and move ahead. But unfortunately, while the demand went up, the semiconductor issue came in. So that sort of impacted the production, and depending on the usage of semiconductor in the particular model, that was also impacting. So it was not overall impacting the demand for the industry as a whole, but it was more specifically towards certain models which use chips more, mostly the higher end models. So those were all impacted. Then coupled with that came in the supply chain related issues. One is the Suez Canal one, and also the China COVID related one. So what is happening is, one after the other, we have been seeing some kind of a challenge coming in. while the basic demand is still in place. But selectively, we are seeing problems with respect to certain programs, certain models. That is what we are facing, resulting in we not being able to cater to the 100% demand. Somewhere around 85 to 90% is something we are able to cater to. And also in between, we saw the commodity prices going up substantially over the last 1 year. That was also to some extent impacting the industry. So to summarize, while there have been multiple challenges post-COVID in terms of one way or the other, the supply chain or the cost increase kind of issue, slowly things are settling down, and we expect that maybe the coming financial year, we are almost, the semiconductor issue is sort of, like Ramkumar said, it's almost out. We are sort of out of it. The supply chain related issues are still getting sorted out. So we feel that the year 23-24 things are going to be different. Maybe not entirely, it may not be felt in the first half of the financial year, but I would say by the time we reach the second half of 23-24, we would see much faster deliveries and we would see things coming back on track. Okay. But even then, we will start seeing the improvement as we move on, but may not be 100%, it might be 85-90%, and slowly things will improve and be back on track by the next year. Also, like the other panelists also put it, the capex, the thrust from the government on this PLI schemes, we are also part of a PLI scheme. So there is a lot of capex that is being incurred, a lot of capital expenditure that is being incurred by the industry. That is all going to yield results towards maybe the second half of this year, and followed by 24-25 is really going to be good. But this year itself we see in the second half. And also one point which we didn't address till now is the FAME allocation, FAME 2 allocation of more than 5,000 crore. That is also going to have an impact on the industry. So I would say that the automotive industry is really going through a good phase right now in terms of improved demand, improvement in the semiconductor availability, improvement in the supply chain, and also we are
the road infrastructure.
We are the road infrastructure that is also going to impact us, and the companies, because of the PLI schemes getting into more capex investment, we are sort of preparing for the future. So going forward, it's only going to be better. That's right. What I would
so it's all
say.
good.
Yeah.
Right. So Ranga, with regard to insurance sector, there is a perception that a lot of allocation has been made to capital expenditure, but on these social sectors, the allocation has not been substantial in the budget. Any take on that?
But if you see the insurance sector per se, the government has already addressed the social sectors, be it the RSBY scheme, health scheme, or your PMFY, which was the crop insurance, Prime Minister Fasal Bima Yojana. So per se, I don't, and also there were some challenges faced by the insurance industry. Despite that, some companies have walked out of the programs and walked in other programs. So I don't think non-allocation or insubstantial allocation to the social sectors will have a real effect on the insurance industry, because it's already been there.
Okay.
And when the PMFBY scheme was introduced some 4-5 years back, the incremental premium to the entire industry was around 30,000 crores.
I see, okay.
And the insurance industry is not able to meet to that.
Meet to the need. Okay. Nice. Right. So this question will be a general question to all three. I think should we take this as a last one because you're touching 1:30. So there has been, we talked about the old income tax regime and new one. What about the reduction in the surcharge from 37% to 25% for income earners above 5 crores? How do you see that? More in relation to, not in relation to the individual, but I'm guessing the overall.
See, there was a meme which was coming. Only 5% of the population pay income tax. 95% of this thing is unhappy with that. Okay. See, I'll tell you, I don't think we are making a big fuss out of this. The guys who are earning so much can afford to pay.
Correct.
And second, only one argument that can happen is, if you leave more money with that class of people, in all probability, it will be used as a risk capital. They will invest, and in a way that will also propel the business.
Correct.
So that way, it is better to reduce taxes per se for such people. It's better. The more it goes to the government, we don't know where it goes.
Right.
This change, see, I only see two dimensions to that. One is they are now trying to promote the simplified one, the new one, the government, and making it as a default one. And this benefit is available only in case you follow the new regime. And the difference is substantial for somebody who's earning 5.5 to 6 crore. For them, compared to the old one and the new regime, there is a substantial difference. So it will push them to naturally pick up the new scheme. So while it could be one of the moves from the government to start making people move towards naturally towards a simplified scheme. So this is could be one of the reasons where, because it will be, I think 100% of the people will move to the new scheme, whoever is in that category, 5 crore plus category, because it's a substantial saving. The other thing is it could be sort of a compensation for the section 54 10 crore limit.
Yes.
So to some extent, because 10 crore is not a big sum today when you're selling a house, and especially in that category of people, they'll be easily selling for higher amounts. So there is something which by capping it at 10 crore, this category of people will get impacted. So maybe this could be a kind of a compensation for that. These are the two things that come to my mind for this.
Adding to what my co-parents said, see, one view which is that they have tried to cover the entire 100% population. Either to the complaint from the ultra-rich was they have not been addressed properly or favorably in the budget. So this is seen as a move to keep them mollified also. So look, from 37% we got it. And it's not that I would like to differ from Mr. Padmanabhan, that people in that bracket, I don't think so they'll be claiming any exemptions like HRA or loan interest. So they would be more than happy to come to the new regime. See, that is again, since I'm not there, I will not have the visibility.
So there is also a consequent change in the insurance, right?
So
That
my gut feeling is, I'm sure most 99% of them would be the new regime, and this is just and my perspective, probably in another 2-3 years there'll be only one regime.
Yes.
It's a gradual progress rather than
Correct.
removing all the exemptions in one shot. They are just doing it in a phased
pushing
manner.
people into new regime. There is also a change in the insurance, right? Now there is a change in insurance exemption, right? The receipt of money at the end of the tenure.
No,
Insurance
that again, the new policy that is effective for policies incepted on or after 1st of April. And again, there's an analogy if you see why FBT was introduced in those days. Because there was a perception in the government that people were misutilizing such benefits of it. In fact, I was told by someone that the guest houses maintained by some of the corporates were more than 5-star facilities, and they were claiming exemptions. So FBT was brought at that point in time to curb such misutilization of the exemptions. Similarly, high net worth individuals were doing the tax planning using this route of paying 5 lakhs and above. So I think, and as one of the MDs of, I think it was SBI Life, only around 10 to 12% of the premium comes from such schemes.
I see.
So life insurance industry per se is not going to be impacted by this regulatory change.
I believe they asked for increasing it to 10 lakhs or so instead of 5
So
lakhs.
they don't see anything. The premium would still continue to grow despite this exemption or benefit being withdrawn by the government.
Okay, I see. That's interesting. Good. That's all. Do you have a question to ask? Sure.
Sorry for standing in between you and your lunch.
Standing between me and your lunch also.
So, point is like we do have as a member of the COP26, we do have made our commitments for the climate change, and really so the union budget puts a lot of trust in terms of growth on a real asset-based growth, yes, rather than a kind of a leveraged financial economy. So, we do see in the current scenario, the manufacturing sector is heavily reliable on steel, and for steel, now they cannot do away with in terms of coal. So, with that context, how is the kind of the union budget, or probably it is putting trust in terms of doing a fine balance
On ESG.
See, we cannot bring in changes overnight. Can you avoid steel? You cannot avoid steel. What can replace steel? Nothing can replace steel. Okay, you cannot go to plastics or anything. It will be more polluting. Similarly, coal usage, can you do away with that? For example, you take thermal power. The thermal power which contributes out of the total power consumption, whatever thermal power contributes, it is coming down. India is one of those countries which have given thrust to renewable energy for a very long period now. In the last 1 decade, we have made a very big progress. Now, while we are talking about moving ahead of our targets in many of these sectors, unlike many countries who give us lecture, okay, we have been moving ahead and we have been demonstrating it also. Okay. Now, in Europe and all, now they are talking in terms of reigniting the thermal powers because of Russia factor, Ukraine factor, okay, because they are not being given gas, so they are restarting the thermal power. I think, we have to be a bit practical in our expectations. Within the constraints that we have, we are doing the right things, promoting hydro, promoting thermal power, solar, those kinds of things, renewable power per se. I think we are moving in the right direction. But at the same time, it is impossible for us to do certain things beyond that. But at the same time, we are making strategic moves, very, very well calculated moves. Only issue is, it has to be pursued in a sustained manner. Okay, there should not be any big policy shifts. Of course, it can happen if there is a big natural disaster kind of a thing. Other than that, I think as a country, we are in the right direction.
Just to add what Mr. Rane said, fossil fuel cannot be wished off. It's only how much proportion it is reduced. And just to add what sustainability is, today there was a newspaper article that the Prime Minister is going to inaugurate a concept called solar cooker. That's under R&D and it's going to be implemented on a pilot phase, which is expected to reduce the foreign exchange outflow up to 58,000 crores per annum if it fully kicks off. So the government is making moves in the right direction in a sustainable manner, and probably the results would be there to be seen in the next 5 to 10 years.
One thing we need to also have in my thing is, this is just about the 6 days back report. India has now moved to 60th place in terms of climate change performance index. Yeah.
Correct.
Against 18 or 20, we have moved to 6. And in terms of the achievements, or rather I would say in terms of the critical index achievements, we have gone ahead in terms of alternate power. 40% of India's energy today is geared towards solar energy, which is a welcome step. No other country has ever done this.
And also this also the government's move to invest around 2,40,000 lakh crores in railways is basically expected to move people from either traveling by road or by flights. No, that's also one initiative which will reduce the carbon imprint of the company as a whole.
Out of the 2,40,000 crores that is going to be implemented only on railways, Vande Bharat, which is totally electrified vehicles, are going to take about 1,60,000
crores.
So we are doing a lot of things. In fact, my next program is at IIA Madras on exactly this digital economy towards a 5 trillion economy. So a lot of things are being